Let us now move on from the small to the big week ahead for your money. There's a lot on the calendar that could certainly shake things up. Number one, you got the start of earnings season with the big banks, JP Morgan, Chase, and others out next week. The expected signing of the Phase 1 trade deal, and you got a bunch of number of Fed speeches. That is all coming in the coming week. So how should you position yourself for, Tim, this big week?
Well, again, the Fed speak, taking what I heard this week, is that you've got a Fed that's probably going to continue to play the game. They're certainly not going to change their course. And if anything, they're going to continue to tell you that they're going to have to balance out pressures and stretches in the repo market. I think as you look at the financials, this is a case where valuations, I realize relative to themselves, have certainly had a big move. But relative to, I think, some of their, certainly pre-crisis levels, I think valuations in banks actually make pretty decent sense. On a price-to-book level, maybe not so much, but on an earnings ratio, again, for these banks, I think you stay the course.
Let's think about it, though. For banks, the way I look at banks is if you look at the XLF, they've topped out. These large cap bank names have topped out in 08, the same level in 2018. And now we're starting to see them dance around that. What was the major catalyst? Dereg and tax cuts for banks. So even if Trump is reelected, he has divided Congress. Things are not going to look as good as they once were. And if he loses, it's going to be terrible. So why put money there?
I think that's the point of the whole story.
Because you're just betting on the yield curve, not politics.
But you're betting on the first half of this year, right? So that's what you've got to look at. And I think at least with the banks, when you think about that, you think about the investment banking that's going to go on. I think after the summer, there's going to be very little investment banking going into an election year. So you have this earnings season and maybe one more quarter to buy these banks, or at least for these banks to make new highs. If they don't make new highs on this earnings season, I think you've got real problems.
Well, you do wonder, if you look inside these big banks, the bank Guy Adami used to work for you, Goldman, and you look at the numbers, and it's always FIC that's been weak, right? Fixed income and commodities and currencies, the trading part of these banks. I wonder, Guy, we had a pretty boisterous fourth quarter. Could we see some of the trading revenues of these firms?
I don't think so, because the risk associated with making those numbers is now gone. I mean, these banks do not take risk at all. So although Goldman, the stock has done extraordinarily well, I mean, that risk profile is gone at least 5 years ago, if not longer. Quickly, in terms of what else I'm looking for next week, I mean, don't underestimate the importance of this JP Morgan healthcare conference. And look at a name like Eli Lilly, which today on a lousy tape was up another couple percent, making all-time highs. So although banks are clearly the most important, I also think healthcare, which has been underloved, has been really performing well over the last 6 months.
What was interesting is you did an interview and you had Meg on today, and she talked about the outperformance during the healthcare conference every other year except for election years. So 2016, they underperformed the overall market, and now we're going into another election year. So let's see if they can do that, because you're going to have everyone throwing massive headwinds at that whole sector. So let's see if it can defy the laws of historic.
Really quickly on this bank chart, though, the breakout in the financials, that's the whole point. This has been a 10-year basing process of going through a complete cancer on the balance sheets and rebuilding. I think banks are re-rating, and they just started. I mean, these were, the entire group did almost nothing. If you look at the best money center franchises, and I think you have to throw Bank of America in there, too, at this point, and Citi is your value play.